more on the EV landscape. I'm thrilled to say that we're joined now by Brendan Jones. He is the CEO of Blink Charging. And let's talk about that outlook. Of course, you're targeting 165 million to 175 million in revenue for 2024. That is compared with the 170 million that was expected by analysts. And the sell side calling this conservative. Could you walk us through how you got to that outlook?
So to that outlook, looking at industry trends, our previous performance, and what we see is the growth rate moving into next year. So the U.S. is expected to go from 8% up to 13% this year, and growth rate is predicted based off of that and the need for chargers, and particularly level 2 chargers throughout the United States. So we're right in line in our predicted increases with where that is. Now, what the street wants us to do is, as we've done in the past, is overperform. But over the last several years, continue to overperform, and you're eventually going to get to a plateau where we have to get our unfair share, but you're not going to see those gigantic exponential like we did last year, where we were well over the industry average. We did 61 million in 2022, and we doubled that even more this year at 140 million.
And Brendan, I think someone's calling you on Skype. Don't go anywhere yet, because I have a few more questions for you. I want to talk about the broader EV industry, though, because, of course, we've seen a lot of some of the traditional car makers who are venturing into EVs scale back their EV production plans, et cetera. And you had Bloomberg Intelligence actually write in December that cooling demand for battery-powered vehicles and a revival of plug-in hybrids, it could cut EV charging companies' 2030 revenue pool by about 20%. Of course, as you're watching this potential coming slowdown in EV demand, what would that mean for your business?
Well, we remain very bullish. If we look at the report, overall, 1 in 5 vehicles sold in the world were EVs. And across the globe, all the numbers were up. And if we even look at what happened in February, we finished, fiscal year 23 or calendar year 23 at 8%. We came in well over 9% in February already. So the space continues to grow. There might be some retraction from some auto OEMs on it, but on an aggregate level, it continues to grow. Now, particularly for Blink, we're just not a U.S.-based company. We have 20 to 30% of our revenue comes from Europe. And if you look at a country like Germany, which is a population of 82 million, they're already well into the 20s and headed to the 30 percentile in terms of EV penetration rate, and Norway's at 90. So the trend is moving from China to Europe to the United States. You might see some ebb and flows and some contractions, but overall, according to McKinsey, we're expected to see in our industry alone that there's going to be a need for 28 million chargers by 2030. And the majority of those are going to be level 2 chargers. So we continue to see growth. There might be some small retraction, but overall, it's a good bet that EVs are here to stay.
Well, Brendan, that's a really interesting point when it comes to the global landscape. And I mean, looking at the likes of Europe, when you look at Asia as well, I think actually we might have lost Brendan, which, is a bit of a bummer since you think about this global EV landscape. And there's a lot of questions about whether the U.S. EV market is going to see the same type of penetration that you're seeing overseas. When you think about the likes of Germany, when you think about broader Asia, and I think we do have Brendan back right now. So let's start with that. When you think about your growth opportunities, do you think that markets outside the U.S. actually present a bigger potential for the likes of Blink?
I think markets outside give us the same upside potential as we see in the U.S. But overall, the U.S. accounts for 75% of our revenue. The rest of the world counts for 20%. And that's the general average. We will see some additional growth in Europe, but it's going to be commensurate as we expand in the U.S., especially with our new manufacturing facility.
Well, let's talk about the competitive landscape as well. Of course, you aren't the only charging operator out there. You also have the opening of the Tesla network. What does that mean for the field?
Well, more importantly, just not the opening of the Tesla network, that the NACS standard is now becoming widely available. So for a company like Blink, it's a great thing. Because we make NACS connectors and cables both for our DC fast chargers and for our level 2 equipment too. So what this means is our chargers are capable of charging every car. And when we look historically at our numbers, the number one plug-in vehicle into our network is Tesla. So that's going to continue to increase. It takes more than one company to satisfy the needs of the EV driving public, and Blink is going to be a leader in that space for the foreseeable future.
It's a good point that the pie is growing. There's plenty of slices for everyone. And you brought up level 2 charging a little bit earlier. Of course, we're talking about airport lots. We're talking about apartment garages. Can you ask us how quickly you're seeing multifamily housing getting charging?
So it's a great question, because we have to redefine home as it relates to EVs. At the beginning, and I've been doing this a long time, home is a single family home, right? But home now an apartment, it's a multifamily dwelling. So next to fleet, which is a very hot end of the EV market and charging market, the next hot end is multifamily dwellings. But we have to define that as condos, then as apartments, and then the charging opportunities have variability. We have to penetrate on an individual level, then on a shared charging level, and then on a municipal level to really satisfy those needs. So right now, we're selling more chargers into those situations than we ever have before, and we're going to see that rate increase throughout 2024, as well as the whole industry is doing a good job at beginning to penetrate that market. That will create that experience that you wake up every morning and you're fully charged.
Yeah, of course, that would give a lot of comfort to people who still have that range anxiety. I do want to talk a little bit more about your production. Of course, your onshoring production capacity to Maryland. Of course, that will deliver you tax incentives and subsidies and the like. But how much does it risk raising the cost structure relative to building chargers in a low-cost country such as India?
Well, to service the U.S. market, the first objective is to make sure we have the requisite requirements for Buy America. And the federal government and other agencies, who we have big customers such as the post office, which awarded the largest award in the history of EV infrastructure at 41,500 chargers. And we do make sure we get them the Buy in America chargers. So we can produce up to 50,000 of them out of the Bowie facility. But globally, we are going to begin also to produce out of our factories that are located overseas in India to service other ends of the market as well. So we have a two-pronged approach. The U.S. market will get the Buy in America chargers. We've gotten our costs down those to be very competitive, because every company that wants to apply for NEVI funds under the $2.5 billion available for L2 charging, you have to be Buy in America compliant, and we're one of the first to do it.
All right, Brendan, got to leave it there. Really enjoyed this conversation. Our thanks, of course, to Brendan Jones, the CEO of Blink Charging.